right, this is the Stocks with Josh show. I've got a lot to cover with you guys today. I'm going to start off with just reminding you about what to expect when the Fed gives us the first rate cut. We're going to look at exactly the time frames in which the market moved after the Fed gave the first cut. Yes, the markets will go down, but I want you to come out of this conversation with a better understanding of what to expect, because it's not as simple as he pulls the trigger, cuts the rate, markets crash. The market's never going to hand it to us that easy, because everybody would just load up shorts and ride them to profit going down. It ain't ever going to be that easy. But let me take you guys into that chart, and I'm going to break it down and explain it a bit more. Okay, buy Fed rate hikes, sell the first to the last cut. All right, let's just go through the characteristics. I want this to be super clear. The black line is the S&P 500. The blue line going up, plateauing, and going down is the Fed rate hike cycle. When it's going up, it means he's raising the rates. When it plateaus, it means he's leaving them alone. He's leaving them unchanged from month to month. And then when you see the blue line go down, that's where he's cutting the rates. And you can see that it does typically coincide with a very strong downturn. The dot-com crisis, there was some substantial rate cuts for quite a long period of time. And the entire time that the Fed was cutting rates, the market was largely moving downward. Then we've got the financial crisis. Lo and behold, we got a rate hike. The markets began to move up, but eventually when the Fed gave us the very first cut, now this is where it gets interesting, the markets went sideways, they went down, and then they went up. But then after that, for the next 2 years, a very strong pullback. And so here's the first thing that I want you guys to notice. It was back in 2000 where the markets largely just reacted with a strong move to the downside. But in the great financial recession or the financial crisis, the markets actually went flat, down, up, and then they went down for a number of years. And then the rate was held flat for a long time. And then the very minute the Fed began to raise rates in 2016, the market actually initially responded with a downturn, but then went on an extremely strong move for a long time. Eventually, the Fed left the rate flat, gave the rate cut. Now, here's where it gets tricky. In the 2020, right before the 2020 rate cuts that were given, the market actually continued to go higher, even though the Fed was cutting rates. So this is very important to understand, that even though the Fed was cutting rates, the market continued to climb, and then it had this really strong and violent downturn while the Fed was cutting rates. So this, even though the market did have a big downturn, it didn't happen the very second that the Fed cut the first rate. And so this brings us to the question, what will happen this time? And so I just want to put this question to rest. The fact is, nothing predictable is going to happen the day that the Fed announces the first rate cut. What we do know is that in the span of time, which is largely going to be about a year, we are likely, because it's never not happened, we are going to get a minimum of a 20% downturn. Now, 2 of the cycles I just showed you had 50% downturns. I just want to make this point. We do need to expect market volatility and a big pullback once we begin the journey of cutting rates. The title of that slide was specifically buy Fed rate hikes, sell the first to the last cut. We can't expect that in the first 30 days of after that cut that the market's just going straight 20% down. That isn't realistic, and it's not what the charts show. But the charts do show that in the course of that next year, after the rate cut cycle begins, we will have a minimum of 20% downturn. So let me take you into one more chart to kind of talk about the severity of recession that could be ahead of us, because this is another topic that I think is greatly exaggerated or confused or misunderstood. Let me show you guys that. Okay, this is the history of bear markets and the recovery. And I'm going to make this complicated chart really easy to understand. The red bars that are moving down are periods of a recession or a pullback. This giant one on the far left is the Great Recession, and it shows that the market went into a downturn for 34 months. That's quite a long time, guys. And it went down 83%. And so that was a tough period of time. But what's interesting is that 83% downturn was then followed by an upswing that lasted many, many more years and ultimately led to an 815% upswing. So this is probably one of the most severe movements that the market ever had. And the fact is that the time that the market is going to spend moving up and how high it's going to go is going to significantly outweigh any downturn. And if we follow that forward for the remaining of the bear markets, the next one, 22% down, followed up by nearly 1,000% move up. This one lasted 6 months down. This lasted 181 months up. 22% down, 144% up. 29% down, 30 months up, 76% move up. 43% down, wow, 844% up. 30% down, 815% up. 45% down, 108% up. And then we had one that was 51% down, and we have been moving up. We're still in this upswing of 451%. And so the point that I want to make there is this. It is always, 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 always worth investing in Wall Street. It's not to say that you cannot lose all your money investing in Wall Street. Some people kind of do a Hail Mary pass. They go all in on a single narrative or idea or stock, and they can get wrecked or annihilated. But I wanted to show you those two charts. First, to confirm that we do have a pullback ahead. The inverted yield curve, which has never been wrong, has yet to produce the pullback that the market's expecting, as well as the fact that the average pullback after the Fed cuts is 20%. We don't know when that's going to happen. The market could continue to climb all the way to the end of this year. We got to keep in mind that we've got bullish things happening. I talk about it all the time. AI is a global, world-changing event. This technology is going to upend or flip the table of every product, service that's manufactured. It's going to change your life. It's going to change your health. It's going to change everything you interact with will be driven by AI in the next decade. So what does that mean, Josh? With that and the fact that we have politicians, aka the politicians that love to spend, there's a ton of reasons why America's economy is going to remain strong and is not on the verge of falling off the cliff. So this is a continuation of the video that I did that was simply saying, I'm bullish. I'm bullish. I recognize that we're going to have a downturn. I recognize that it'll be 20%. But if you are looking at the big picture of investment, just want you guys to rest assured, even if we get a downturn, and even if it was 20 to 50%, I just showed you that chart, that in the course of time, the markets will move up way more than they'll ever move down. And that's a fact. That's the history. That's the chart. Price is truth, and I just showed it to you. All right, I'm going to take a very small station break to shout out the Moomoo investment app. Guys, if you just want to get ready and you want to buy on a dip, well, you can consider opening up an account with the Moomoo exchange. They're going to give you, if you put in $100, they're going to give you, if you use my link, they're going to give you up to 10 fractional shares to start your investment journey, and they're going to give you fractional shares in the Magnificent 7 stock. That leads me to the next stock that I'm going to talk about, which is actually Tesla. I wanted to cover some interesting news stories surrounding Tesla that I just had to cover, as well as give you that Stocks with Josh Alpha of the direction that Tesla is going to likely move this week. I'm going to get into that in a minute. But what is the news stories surrounding this? Well, let me just share one of them with you and we'll go from there. So it was a big deal this week when Warren Buffett made comments on whether Elon Musk's FSD would impact Berkshire's auto insurance business. As soon as he made those comments, the big question is whether or not Warren Buffett would actually become a Tesla investor. Of course, everybody who is a Tesla investor, including myself, began to simply drool at the idea of Warren Buffett loading some of that $200 billion of cash that he's been holding on to, possibly into Tesla. Well, I'm going to follow up with another news story, and then I'm going to explain to you what I think is possible and what I think is happening with the Tesla stock right now this week, what to expect and how to get positioned. I'm going to start off with this news story, which simply says, sorry, Elon, Warren Buffett won't be buying Tesla stock. Tesla doesn't fit Berkshire Hathaway's formula. So the question is that true? And I'm going to say absolutely yes. Elon, unfortunately, you can just put it to rest. Warren Buffett is never going to buy Tesla stock. It just doesn't fit his, we're going to call it the Warren Alpha strategy. So here's what he's looking for. So this is a guy that buys stocks when they're on sale. He has accumulated $200 billion of cash right now so that at the right moment, he can buy distressed stocks. He buys when there's blood in the streets. People talk about that, but they overuse that phrase till it means nothing. Warren isn't going to buy until people are actually walking away from the stock market, just panic selling everything because they believe that the economic condition has changed. Maybe it's war, crisis, black swan events, COVID, 2, 3, 4, 5. That's when Warren's going to put money to work because he believes that second chart that I showed you, that no matter, he's looked at that chart, no matter when the market has pulled back, it's always gone higher. And so the first strategy of Warren Buffett is to buy in a panic, and there's always going to come a panic. COVID gave us an incredible panic. That beautiful, ridiculous, oversold move down. Everybody knew that it was an overreaction. That's when you're going to see Warren Buffett begin to buy. First strategy of Warren, buy when it's on sale. Now, he came out and said, stocks are not on sale, and they're not. The PE ratio right now for the S&P 500 is elevated. They're pricey. Does not mean they won't go higher. Personally, I am convinced they will go higher, but it is not an environment where Warren Buffett's going to spend a lot of money. And then the second part of Warren Buffett's strategy is he wants to get paid to hold the stocks long term, which means the second part of his picking strategy is he wants to find stocks that will pay a dividend. Now, he already bought the company when it got oversold, but then he wants that company to pay him. It doesn't even matter how small. I don't think he's got a high criteria that it has to be a certain percentage. He just loves the idea of holding a distressed company bought at an opportune moment that pays him to hold it. Those are two of his biggest expectations. He loves to get paid those dividends, and his stocks pay dividends. Now, the third one is one that I talk about on this show all the time, and I think it's one that a lot of retail investors lose sight of. And Warren Buffett never lose sight of it. And that's companies with improving profit margins. Now, that's the number one reason why Warren Buffett would not be looking at Tesla right now. He's not Kathy Woods of ARK Invest. She wants to invest in growth stocks, innovation, changing industries. She wants to get ahead of those and ride up that momentum like a roller coaster, right? I've seen her screaming as it's come down more in the last couple of years, but you get my point. Warren Buffett wants to invest in companies that are having increased profit margins. We know that Tesla's having decreasing profit margins, and that's why the stock has been punished over the last couple of years. So this company does not really fit any of the criteria. The closest one that might compel Warren to nibble a little bit on Tesla, which I don't see happening, is the fact that it is on sale. But that's debatable as well. Now, that's Warren's opinion. I personally am bullish on Tesla. I fall somewhere between the Kathy Woods and the Warren Buffett mentality. I will be more bullish on Tesla when they begin to protect and grow and show that they can grow their profit margin. A lot of folks, retail investors, fall in love with stocks that have these fanciful stories of potential growth, but they're not making any money. They've got net negative cash balances. Tesla's not in that boat, but we want to see their profit margins grow because that tells us that they're ahead of the competition. Right now, Tesla's got a ton of competition. Now, I took a huge risk on Tesla at $140. I literally did a video every day of the week when we were back at $140 because I knew that it was going to be important for some of you guys to buy at that moment. And we went all the way up to $200 practically. Now I'm going to take you in the chart, and I'm going to tell you guys that I largely believe that Tesla's still coming down. If you were writing puts down with me, you would be making a ton of money. Those have been the most profitable way of being a Tesla investor in the last week, has been to ride puts down. I don't believe the trip down is over yet. Let me take you guys into the charts, and I'll show you what I've got in what I'm targeting over the course of this next week. Okay, the first thing that I want to show you guys, and it's just, I talk a lot about this, it's about these ascending channels that break strong to the downside, ascending channel, broke 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 to the downside. But this at 140 was a V-shaped recovery, breaking structural resistance. When it broke past 177, it broke structural resistance. And now I believe that in the days ahead, we are actually going to have a change of character that's going to look like these descending channels, which are going to break to the upside. Descending channels, which are going to break to the upside. And I think that we're going to get back to this 220 to 240 area, but not this upcoming week. At the moment, we're still digesting that move from 140 to just under 200. And I want you guys to be prepared with the idea that we can come down to this structural support right here at 163. And I think that it is likely to happen this week if it's going to happen. Now, I want to put out some qualifiers. If we open and close above 170, then we could actually be moving higher pretty quickly. But for as long as we open beneath 170 on Monday, and if we see weakness and it's sort of moving sideways, my belief is that we're largely going to potentially backtest 170 at best, and then make a flush down to 164, 163. If we don't get there even sooner, pre-market hours. If we hit this 163 range and we bounce, well, we can expand the conversation and determine if the volume and the momentum look as if we've satisfied this down move and can go higher. When we originally got this up move, I called out that we should be getting back to 160 as a retest of this structural support, right, before we could climb higher. And so I still think that that's what we're gearing towards. This has been very profitable, taking it to the downside, and I think that we've got to do a little bit more downturn, 163 minimum going into this week. So that's the basic game plan. I don't know exactly what my next video will be about, but I will tell you an up-and-coming video this week, Palantir. I think I know exactly what price we're going to hit that I'm going to begin to watch for the reversal at. Palantir has got a pretty defined trend line, and it is going to also, with Tesla, be coming down a little bit more. But like Tesla, I'm looking for that move down that compels me to get back in. I'm going to be buying some shares, but I'm also going to be buying some calls. And I'm going to be dropping some of these charts in the Stock Squad Patreon. That's the Discord with Stock Mo, Keenan Grace, and Stock Up with Larry Jones. I'm going to be dropping some charts there specifically going into Tuesday. I do a Technical Tuesdays where I share as many charts as I possibly can throughout the day. Pretty good setups for the rest of the week. Guys, thank you for joining me today. Hope you all have a wonderful and restful weekend. Hit that subscribe, hit that like. If you've made it this far, then I think I've earned the like. It allows more people to view it because that's what YouTube's looking for. Appreciate you guys. Peace and blessings. Take care. Bye-bye.